It is important. I mean, this is something that's congressionally set for the Fed to follow, is the dual mandate of ensuring price stability and maximum employment. So that's something that the Fed, both Powell and the rest of the officials on the board and the regional presidents will say over and over again that this is their commitment and that this is so important to the American people, and that's who they serve, not the president of the United States. So in terms of having a dual mandate, yes, and they really do go hand in hand. And something that Powell has really stressed a lot recently is that you can't have maximum employment without price stability, that the two of them are really interrelated like that. And it's really critical now as we're seeing the labor market cool, maybe a little bit more notably. Of course, if you look a little bit beneath the surfaces of what happened in last week's jobs report, it was a lot more clear than what the headline numbers would have suggested. As far as Powell's job security, obviously that Supreme Court ruling, probably gave bit of comfort for Fed watchers for now. I don't know how much Powell himself really worries about this. I mean, he's obviously a staunch supporter of Fed independence, as well as the rest of the people on the committee. His term as chair is up next year. Whether, though, he stays on as a governor beyond that, that's still a couple years away.
Ira Jersey, come on in on this. And I want to get your thoughts on what we heard from the vice president, specifically this part. He said to John Farrow, Lisa Abramowitz, and Anne-Marie Herdern earlier this morning on Bloomberg Surveillance, quote, "I don't really accept that the Federal Reserve should be a completely separate agency." What does that mean to you?
Well, you can have your opinion, right? We're all entitled to our opinions, but that's just saying that, hey, we think that maybe the Federal Reserve and the central bank should be a political organization, a political arm. Now, there's a lot of literature in academia and elsewhere talking about central bank independence leading to better outcomes when it comes to inflation, right? And all of these have to do with inflation because Vice President Pence is right. There is a dual mandate. His mention of the dollar is a little baffling because nowhere in the Federal Reserve Act does it say that the Federal Reserve has anything to do with the dollar. It has to do with maximum employment and inflation. And certainly if you got rid of that maximum employment mandate and gave the Federal Reserve a single mandate of just inflation, then you could wind up seeing maybe slightly different outcomes. And maybe the president would actually not like that, right? Because if you only had to look right now at the inflation situation and not jobs, the Fed might not be considering cutting at all. And I think that goes against maybe a little bit of what the president and this administration would like.
Well, let's go a little bit further with this. The ECB, the European Central Bank, right, and the Bank of England prioritize price stability. Are there lessons to be learned, Molly, from kind of having a single mandate?
I think, it's tough because it's not like one really operates independently of the other, right? Like so much of also how inflation moves has to do with the job market and what's happening with wages and what businesses are doing, and in terms of like what they charge of their customers has to do with a lot of like what they can really afford to spend and like how much of their expenses are then allocated to the labor side of the business, not just, charging of customers. So I think it's hard to just ignore it. I mean, I think there's also just been a lot of conversation, too, around the 2% inflation target, which is, that's really common globally. Those central banks, as well as others, are at or around 2% for that target. And that's something also that's come up a lot in terms of, like, is this really the magic number, 2%? And, of course, that, it would be horrible for the Fed to just abandon that in the middle of getting closer to that 2% goal. Of course, that's not something that they're thinking about, but other critics of the central bank have certainly called on them and to say, what's so bad about inflation in the 2.5% to 3% range, which is right about where we are now.
Right. But you're right. When they're so close, like to maybe move off of it. Ira, what are your thoughts about when we look at something like the ECB or the Bank of England that does have basically a focus on price stability? Are there things that we can learn that maybe are positive or negative to having just basically one focal point?
Well, if you have one focal, so some of the times the ECB, because they focus on headline inflation, they can actually be driven. Some of their policy decisions can be driven by things that are completely not in the domestic economy's control, right? So one of the benefits of some of the things that the Fed does, like for example, looking at core inflation, which tends to be more stable over time, whereas headline inflation can go up and down and be really volatile because of its reliance on energy prices in particular in the short term. Sometimes the ECB is a little bit behind the curve in thinking about maybe inflation coming down very dramatically because oil prices are very high, and so there are differences between the way that central banks operate. And part of the problem is there's no one right answer for any of this, because the fact is that countries are different. The way that even financial sectors and the way monetary policy is transmitted is meaningfully different between the United States and Europe and Britain. Just because we have a huge money market industry, for example. We have very long-term mortgages where you go to Canada, for example, and England and the UK, and they tend to have very short-term mortgages and mortgage resets. So their monetary policy actually filters through the system much more quickly than the Fed's policies. So there are structural differences that always have to be taken into account. But when it comes to having a single mandate or having an independent Fed, there's no doubt that an independent central bank tends to have better outcomes, because otherwise interest rates tend to be too low for too long. And you've seen that in a lot of jurisdictions.
Hey, Ira, before you go, just about 30, 40 seconds, 30-year bond auction. Seems like Treasury market liked what they got. Tell us about what we need to know here.
Yeah, not terrible, not as strong as last month. Last month was a blowout, super strong demand at the 30-year auction in June. This month weakened a little bit, but it's still the market priced perfectly where the auction was going to come, and bidding demand was pretty decent. The thing that we've seen in a lot of these auctions is an increase in direct demand, and that's a little bit different because we don't know exactly who those people are. So we'll find that out in about a week and a half.